To Olympic Media Managing Editor, Katie Frates. We've also got right now, who else do we have? I'm sorry, Mollie Hemingway, the Federalist Senior Editor, and Alan Knuckman of Agora Financial. He's the Chief Market Strategist. Alan, you're right there in the middle of all of this. Is it your sense that what will ultimately decide where this market goes, where these earnings go, where these economic numbers continue to go? What is leading what?
Yeah, fundamental facts. It's great to be back to hard numbers and see how well corporations are doing. Blowout earnings, amazing earnings. That's what drives the stock market. And we've talked many times about ignoring policy and politics and just focus on the price. And we're seeing some nice price reaction. I like what happened yesterday in stocks. After that flush out we had, yesterday the markets made new relative lows, new weekly lows, and reversed course and closed positive. So that was a very encouraging sign. I remain very optimistic and opportunistic about the future. But to get back to the 10-year note, everybody's focused on this 3%. I don't think that has any impact. I think the only thing that's going to have any impact is if interest rates for home mortgages get above the 5% level. That's going to be a psychological issue. But right now, we're a long ways away from that.
You know, Katie, the reason why interest rates are backing up is a reflection of the good economy. Now, of course, you don't want them to keep backing up nonstop. But even at and around 3%, that pales in comparison to where they were back in 1987. We got as high as 10%. But the markets don't know where this stops. What do you think?
Well, I mean, I think the base point is that people have more money in their pockets. The economy is doing better, whether people want to point that out or not. Obviously, President Trump's policies and the policies that Republicans have put through are showing good gains for American citizens. And I mean, I don't think it's certainly going to get worse, regardless of the fact if no one's going to talk about it. You
know, that's a very good point. Mollie, I'm looking at a lot of different cross currents here, and one of the things that continues to pop up are these really off-the-chart earnings, to Alan's point. I mean, now, you have some exceptions, some that guide down a little bit after better-than-expected numbers. But by and large, we're looking at a year-over-year clip of about 30% here. That could change, but it is amazing, given the only differentiator here is the tax situation in the first quarter versus what it was a year prior. How much are the lower taxes feeding into this good corporate news?
I think that's one of the things people are wondering is if what we're seeing now even reflects that full impact. People are expecting that once people get their returns and the tax reform is more fully realized in people's paychecks, you're going to see even greater growth. And it's not just what's happening in the stock market, this day-to-day situation, which can be somewhat volatile. But some of these underlying issues, like the news that the jobless claims are the lowest they've been since 1969. I mean, that is a really tremendous number that suggests that it's not just about, what's happening, again, day to day in the stock market, but some of these fundamentals or with durable goods and how much we're seeing the growth there with everything from stoves to airplanes. These are things that are worthy of coverage as well.
You mentioned on the airplane stuff, and Alan, one of the factors behind the stronger than expected durable goods orders were a lot of people, I'm sure yourself included, were buying aircraft. But take that out of there, maybe not so robust. And there's this concern that this spate of good good economic news sort of slows. Are you worried about that?
Well, everybody's worried that we can't keep up this pace and these exceptional earnings like I referred to. I think we can, and if you look at the earnings growth projections for the next couple of quarters, they're going to increase. We're actually going to see 20% earnings growth in the third and fourth quarter. So we've got some high bars to achieve, but we've been able to do it every time so far. But I think one thing we've got to remember is we've done this against a backdrop of a lot of potential crisis. I mean, when you talk about a trade war, when you talk about the political issues that we've seen and see the market remain stable, we're unchanged in the S&P for 2018. And if you look at where we are in the last year, we're up double digits in all of our stock indexes. So, yes, we periodically give back gains, but overall, net, we've weathered some major storms, and we're still holding strong.
The president earlier on was on Fox and Friends, Katie, talking about, I guess, some consternation with the obsession on scandals and the ongoing Mueller investigation and his lawyer, Michael Cohen, who he said he does just a teeny bit of business with. And it bothers him that all this stuff is getting lost in the sauce. A lot of Republicans were bemoaning that when I was in Washington last week, that word isn't getting out and they could be imperiled in the midterm elections. Without getting into the political weeds here, is that concern justified, this so-called blue wave, despite all of these good economic fundamentals and people feeling, who used to be overwhelmingly against the tax cuts, now more inclined to like them. Is that just not being measured properly, or is the appreciation of that not being covered properly?
I would say probably the latter, that the appreciation of this is not being covered. But at the same time, I think there's two things. On one end, if you're left-leaning, you're probably not going to want to cover the good things that President Trump is doing. But also at the same time, Neil, I would say that good news isn't nearly as interesting as salacious, juicy gossip.
You're right about
There's
that.
a reason that Americans love reality TV, and it's not because the people are happy.
See, I always tell people that I'm built for comfort, and that I'm the guy you come to when you want to know the nitty-gritty of the economic stuff. But, Mollie, there are a lot of people who are looking at this and saying, well, you really can't attribute this improvement to the tax cuts or the lower regulatory push. But a number of economists who have no, skin in the game one way or the other, for the president, against the president, are saying those tax cuts have made a measurable difference in at least the retail outlook, in the housing outlook, higher rates notwithstanding. Actually, higher rates very much part of that because it's a reflection of the improved environment. What do you think?
I think people do attribute too much of the economy to the actions of one president. We saw that we saw the problems during the Obama administration. We had a really sluggish economy, and the media didn't cover that either, and they're not doing a really good job of covering it now. But I think actually regulatory reform should not be undervalued. When we talk about these earnings reports, that corporations can have some consistency in how they're being regulated, some expectation of what the regulatory scheme will be. I don't think that should be undercounted. That is actually a pretty significant issue for a lot of corporations.
No way to forecast what happens in November, but we can talk about the environment and how long this continues, because the president told it this morning on Fox News, he's very confident this is just the start of it. He'd be wont to say that, but Alan, is it your sense, looking at the numbers, looking at the backdrop for these markets, and they've been volatile, certainly, that this backdrop of improving earnings and improving economic numbers will continue through the fall?
It certainly looks like that. The momentum has been strong, and again, this has been a multi-year. We're going on 8, almost 9 years of this overall market turn and market strength. Now, that's not the economy. We're getting a lot of supportive economic numbers and data, like you talked about, that people don't maybe appreciate. But if we're focused on the market, which I do here, because it's all about price, it's been essentially a straight-up move. Now, we've paused here in the S&P. We've been trading between 2,600 and 2,800 since November. So let's see where the next move is. We've been in a strong trend. The upside breakout targets 3,000 in the S&P. So let's not say it's over. It's just taking a bit of a break right now, and it's going to start to reflect some of these facts that we're hearing about every day. I think will give the market more confidence.